Good morning. Today is Monday, August 17th, 2026. This is the Monday Brief. The Monday Brief is a lens into our process because our process is what makes us different. Most advisors don't have one like it, and fewer still would show it to you. Each week, we touch on what's happening in the economy and the markets, what's coming next, and what we're keeping an eye on. Then we take 3 companies requested by viewers, and we give you the questions our process would ask about them. We can't always give you here are our answers. Nothing we say publicly is an opinion or a recommendation to buy or sell anything. And clients of our firm may hold positions in companies we mention. That's not us being cagey. Those are the rules, and following rules is kind of our thing. Let's get into it. So last week, the market hit another all-time high on Thursday. That's the 27th record close this year, if you're counting. Then Friday took a little back, and the reason matters. Retail sales came in soft, the weakest month we've seen in over a year. Meanwhile, inflation, right where everyone expected it. So here's the tension the market's sitting with right now. Prices have calmed down, but is the consumer getting tired? Nobody knows yet, which is exactly why this week is interesting, because we're about to get some real answers. 3 things I'm watching, and I'll tell you specifically what I'm listening for. Thursday, Walmart reports. Honestly, I care less about their numbers than their words this quarter. When Walmart talks about how the American consumer is behaving, whether people are trading down more or less, that's about the best read on Main Street you can get. After Friday's soft retail number, I want to hear what they're seeing. Same day, Deere reports. That's our neighborhood, the farm economy. I want to know if equipment demand is finding its footing or still working from the slump, and what they say about used inventory sitting on lots. And Wednesday, we get the minutes from the Fed's last meeting. One thing I'm reading for, how divided the room was. How they argued tells you more than what they decided. Now, some of what we hear this week could end up mattering for work we're doing behind the glass. I can't say more than that, and that's kind of the point. But here's my promise. Next Monday, I'll come back and tell you what came of all 3. We say what we're watching, then we grade it. That's how we do everything. Okay, the request line. 3 companies requested by you, and I'll give you the questions our process would ask about each one. Full honesty, this is episode 1. So today's 3 come from the week's news. Drop a ticker in the comments, and next week's 3 come from you. First up, Cisco. They build the plumbing of the internet, networking gear, and lately, a lot of the hardware behind AI data centers. Last week, they reported a record quarter, revenue up 18%, huge AI orders, and the stock fell 9% anyway. Why? Margins. All that new hardware makes less profit per dollar than their old business. So here's what our process would want to know. When revenue's growing, but margins are shrinking, which force wins over time? And is a record quarter the top of a cycle or the start of one? Those are the questions. I'll let you sit with them. Second, Tapestry. That's the company behind Coach and Kate Spade. Funny story, they beat expectations. Coach sales up 15%, and the stock dropped hard anyway, because their forecast for next year implied the growth is slowing. So the questions, how much of a hot brand's momentum belongs to the brand, and how much to the moment? And when management gives a cautious forecast, is that weakness or is that honesty? Worth thinking about. And third, Monster, the energy drink company. They split their stock 2 for 1 this month. And if you own it, your statement looks different now. Twice the shares, half the price. People always ask what a split means. And this one I can answer because it's math, not opinion. It changes nothing. Same company, same value, smaller slices. Their sales, by the way, up about 20% last quarter. The real question our process asks about a business like that, when a category matures, does the leader keep its pricing power? That one I'm keeping to myself. So what are we keeping an eye on this week? Truthfully, the same thing as every week. Everything our clients own, checked every single market day. What you just watched is the small public slice of that. If you're curious what the full version feels like pointed at your own accounts, that's literally what our 30-day test drive is for. It's at bravo-4.com. I'm Kenneth VanHouten. See you next Monday. Securities and advisory services offered through LPL Financial, a registered investment advisor, member FINRA and SIPC. Have a great week.